There's a quick political policy fundamental question.
Yeah,
With
go.
3 months to the election,
Yeah,
$800 billion still in the Treasury General account.
yeah.
Do you think there could be any kind of funny business to prop the market up into the election?
Yeah.
Well, again, you've been around for 35 years. You know what I mean?
Yeah.
Your opinion
No,
is
I
good.
do. I'm sorry, I do. I
Of course I
understand
do.
that they talk about how the Fed is independent, but the Treasury is not. The Treasury falls under the executive branch.
Mhm.
And it's no secret that Treasury Secretary Yellen is not popular on the Trump side of the ledger. So it's not necessarily that she thinks she's going to keep her job one way or the other. She may resign after, if Kamala Harris were to win, if Vice President Harris were to win, she might resign. We don't know. She might think, okay, my work is done here. But it would not shock me to see, quote unquote, funny business like some stimulative spending coming from the Treasury. And also, again, we saw the schedule, which the schedule of the Treasury issuance gets announced, but I found out recently it can be adjusted midstream. And they're already talking about doing more bills again, which, Jimmy, one of the things you pointed out to me 6 months ago, that you started to see a trend that they were using bills as cash, basically, for lack of a better way of explaining it. I don't want to go into the weeds
No,
with
yeah,
it,
wonky.
but
Yeah.
essentially issuing more bills rather than long duration notes is essentially putting cash into the market.
Mhm.
So I think they're already doing it.
Welcome to the Futures Edge Show. I'm Jim Muriel. That's Bob Iacino. We're recording with Chief Strategist of Path Trading Partners, Mike Arnold. Now, by the way, the stock market, tumultuous volatility over the last couple of days. Now, it is one thing to a week ago be some macro talking head saying, yes, I think valuations are stretched and the market is due for a correction. There's another thing to look at technicals, decide when it's going to happen, but then once it happens, the key is what does it mean and where it's going to go. Everyone, it's lazy to just say, yeah, there's a lot of people along the Nasdaq. They're probably going to keep selling. Let's see what Mike thinks and what the technicals tell us. Thank you for coming, Mike. How are you?
I'm doing good. Thanks for having me back on.
Okay, before we go into the technicals too, let's just take a moment in time to ridicule all the idiots who yesterday morning for a 3-hour period were like, the Fed needs to cut rates now. For the love of God, what are they talking about? I think the economy is going into a recession, but Jesus Christ, the burning timbers weren't falling from the ceiling just because you lost a buck, my friend. Bobby, you got any comments on that?
I do. I would like Professor, I think it's Jeremy Siegel, to just retire. He
Yes.
came on, I think it was the TMZ of financial media, I'm pretty sure, because they love him, and said that the Fed should do an emergency 75 basis point rate cut because the NASDAQ futures had dipped into bear market territory and nothing else had. We need a 7 after the rally that we've had since those famous October lows. Mike, you don't even have to show anyone on the chart where that is because everybody knows what we're talking about when we're talking about the October lows. That massive rally, we get about a 23% drop from there over the course of, say, a week and a half. Is that fair? That's a 75 basis point rate cut with a 4.3% unemployment rate, 2.6% inflation.
A bunch of babies.
But they were even calling for that after the unemployment. It wasn't the 75, but they were calling for we need to go 50 in these rate cuts started last week after the non-farm payrolls. It's gotten
before.
It was just insane.
Well, before we go to the charts, I want to ask both of you. So a lot of people are pointing to the payrolls number, right? And saying that, okay, this is the trigger. We've got the 2s, 10s, and we could talk about this as a separate subject, Mikey, but we got the 2s, 10s almost positive. It went to -8 on a settlement basis 2 days ago. By the way, we're recording this on Tuesday, the 6th. So you guys aren't seeing this. You're seeing this like a week later. But I want to ask you guys if you think this is the unwind of the Japan carry trade, or is this a coming recession or in the US, or a combination of both, Jimmy?
So I think historically, when the Fed is in neutrality, like they were eyeing an easing cycle, generally this is what happens. The stock market looks for reasons to flex its muscles gets hammered a little bit, pushes the Fed from the sidelines in because a bunch of people run around like Chicken Little that the sky's falling. I believed this was going to happen. Did they use the occasion of the violent unwind of part of the yen carry trade as one of the reasons to sell off? Yes, but remember we were weak before that. But do I give some of the credit to the chaos that move was? Yeah, of course I do. The facts now also throw in the fact that the Japanese stock market had broke like 27% in 3 weeks' time prior to the unwind of the carry trade. But I think it matters. All these people coming out today saying it had nothing to do with it. I think they're crazy. I think the market looks at chaotic trading and gets scared. And as you pointed out yesterday on our short, is that there are very fundamental reasons why people would sell things that are making money if they're long things that are getting their ass handed to them. But Michael?
Yeah. I think it's a combination of both. I mean, I think you're going to see more unwind over the coming weeks because you had to keep rolling the carry trade forward, and now on the next rolls, it's just generally going to affect things. You're going to start unwinding that more so and also we're going to head into a recession now. Oh, and the last little blip, the pandemic recession wasn't really a recession. What it lasted like for 2 days. When's the last real recession we've had?
Oh, wait.
No, wait. That's the acknowledged one. Like if you look, for example, on Fred, the St. Louis Fed's economic data website, they do have COVID in gray, highlighted in gray on their charts as a recession. But the last real one, Jimmy's right, was 2008.
Right. And by the way, was it last year, at the beginning of last year, we did have 2 negative quarters of GDP growth, which I had learned was a recession, but then they quickly changed the definition.
Yeah.
I mean, we're due for slowdown recession. I think it's been just postponed by all the insane spending by our government. So, but you know what? Recessions are good because they flush out all the crap. The problem is nobody wants any pain. It's back to when market's dropping a little, and let's have 75 emergency basis cut, and let's cut 125 this year. It's okay on a couple week pullback. Really, we can't take any pain.
Bob, it just dawned on me. The market thing, the economic thing, is exactly like Robert Lufkin's book, The Lies I Taught in Medical School, when he talks about feast mode and famine mode for the body and how it benefits from flipping back and forth. And I'm not even joking. Recession versus boom times is the same exact thing. Like Mike says, we're supposed to flip into a recession, weed out the crappy companies, leave the stronger ones with less competition, and then move from there. But we haven't been doing that for the last few years.
Get rid of some of the excess leverage, right? Sonali Basak on Bloomberg, who's one of the only remaining reasons to watch Bloomberg, her and Jonathan Farrow, put out used a phrase that I really liked: embedded leverage. There's embedded leverage in the market through bull markets, especially as the bull market gets a little long in the tooth.
Oh, meaning you get leveragey because your position went up so much.
Well, yeah, people who get the leverage is embedded. I mean, a lot of these funds, hedge funds, even private equity, they use leverage to do things. So when you start getting selling, this again gets to the core of the idea that people sell winners in order to cover margin and cover requirements for the losers. And I've been using a gardening analogy. And Mike, I seem to think you know a little bit about plants. That might be something I'm making up in my head, but
you think you're accusing Mike of growing pot, aren't you?
No,
it's not because I'm wearing the Grateful Dead shirt.
I know he grows pot. I'm not accusing him of it, but no, I'm just kidding. He doesn't. But you prune plants in order to grow them back healthier. You don't just let the middle stalk of a tree grow to the moon and suck all the energy from the rest of the sprigs that are coming out. You prune plants back in order for them to grow into a healthier overall plant. It's the same kind of thing with sell-offs in the market. They are not a negative thing.
Exactly. So let's get on to the sell-off in the market too. We have this S&P chart up there, which I was hedged to the gills and did not nearly cover enough. When the VIX had spiked up to 50, I covered some, and I thought, having the right position on in a chaotic market time is great. but knowing when to take it off is somewhat difficult. So then today I lost money of all those hedges I had on that I shouldn't have on the way up. Michael, what do you think of this market?
Well, first off, we're getting. I mean, the VIX pulled back like 20 yesterday, but I don't think this down moves over. The market can always prove me wrong. We have magnet prices lower. We completed a couple topping patterns, like we had a little mini head and shoulders top in the S&P and Nasdaq, which completed on the spike down. We should still see, from a probability standpoint, at least a retest of the area of Monday the 5th's lows, if not break it. Like in the S&P, we have a very key magnet price around 5060, 5060, which would connect it with the 200 simple area. It would connect it with an 87.5 retracement. It would connect it with a harmonic extension, and it would be in the neighborhood of the area of the April lows, and that's for the S&P. Is that a guarantee? No, it's not a guarantee, but on any route, we've also triggered a massive wedge pattern. So, and that target's even slightly lower. So in my mind, it's still, until the market proves probability-wise proves that wrong. There can be long trades, there can be bounce trades, but I'm more conservative on the targets for the bounce trades and more aggressively watching for the rollover trades, at least for the next couple weeks, until we form a stronger bottoming pattern, or until we close on a daily basis back above 54.95.
So when you talk about 50, 60, I want to make sure everybody knows Mike's looking at the futures. So he's looking at the ES. He's not looking at the SPY or any other index, the SPX, whatever you want to look
I'm
at. We're looking at the ES here.
The September futures.
Yeah, so and you can relate it. Like if you see where this is, you'll be able to see it on your cash charts if that's what you're looking at. So are you yet in a mode where you would be more partial to selling rallies than you would to buy dips here, or no?
Yes, I am more partial to selling rallies than to buying dips. And on the dips, I have to have a closer target and manage it tightly from a risk perspective, because the dips can be, or the rallies can be, short-lived. Also, when you go through, you guys have been around the markets for many, many years, like I have. When markets are more so making a transition, their volatility tends to increase, which is what we've seen. And I'm not just talking yesterday. I'm talking over the last couple of weeks, what's been going on. Volatility has been increasing. So it's getting edgier, and that can be good both on the upside and downside. You're going to still see rip your face off rallies, and you're going to see pretty potential rapid declines. Now, starting more towards the end of August, we'll get to some cycle bottoms. We could easily then snap back into September, and then it's a free for all up into the election. But I'm not getting aggressive to the downside just yet. If there's a pattern, it can be traded, but it's not just throw your money back in and close your eyes and hope it goes to new highs.
So you, in the past, have talked about one of your favorite harmonics, which I believe is the 0.625. Is that correct?
Correct.
What is that level here? And if you got a couple closes below it, would that be a drop dead switch or no?
Well, there's a couple things. First off, on Monday, from the harmonics from the April lows to the highs a couple weeks ago in mid-July, the 62.5 harmonic based off the futures was 52.47.75. We closed below that on Monday. We've since then bounced a little, but this is just a minor bounce. What that did is shift the short-term probabilities down to that 5,060 area, which also corresponds with the area of the simple 200 on a continuous futures chart. And it gives us in the range of those April lows again. That's why that's my magnet price on any rollover. The bigger thing, and that also gets to the bottom of the wedge area. The bigger thing, the two next key areas, if we did drop below 49.21, That would be the 50% run up from the lows of October. And then the major line in the sand where I will probably kiss the market goodbye for a lot longer would be about 4,700. Now, what's interesting before we get to that is if we get a bounce down here, anywhere down here, we might be setting up a much larger head and shoulders pattern. It's still too early to talk about that, but we could be setting up a multi-month topping pattern potentially. Potentially. It's not there yet, but it's something I'm going to be keeping an eye on. And that's not just me putting on a bearish hat. That's me saying, okay, where could this market, we've been in bullish mode since end of last October, but where could this market be setting up for a potential shift? So maybe that will unfold, maybe it won't. We could turn around, rocket back higher, and, everything's off to the races again. But some things would have to drastically change, and in the short term, we'd have to get a close. Just remember about 5,500. 5,500. If we get a daily S&P futures close about 5,500, then the probability is shift to retesting the highs from mid-July.
Oh, wait, did you just shift? Because at first I thought you said 50-50 on the downside. Then you said 5,500. Which one was it? I got confused.
5,500. If we close above that, then we've invalidated the potential bearish patterns, and we should go retest from a probabilities point the mid-July highs. But if we don't see a close above that 5,500, I'm still watching for rollover plays, at least in the short term.
And the key level to the downside is 50-60, right?
50, 50-60, 50-50, 50-60. I mean, that's a 10-point range on a 5,000 handle future, so it's not that.
Yeah, that's why I got confused. Those levels were kind of similar sounding, 50-50 and 5,500. Okay. Bobby, you have anything else with this? You want to move to Nasdaq?
No, I'd like to go to the Nasdaq, but before we talk about this, I have a little bit of a public service announcement for our loyal listeners. We had Dr. Carrie Ingraham on our show a couple of weeks back, and somebody made a very large, very, very large anonymous donation to the Discovery Institute's American Center for Transforming Education. Now, I don't know who it is. I'm not asking who it is. If it's part of our audience, I hope it was. But she reached out to me and said it wasn't designated to what part of the Institute this particular donation should go. So I'm reaching out to the audience to, if you did it or you know who did it, I don't need your identity. I don't need you to tell us. Just reach back out to them anonymously again and let them know if it was for this show and you wanted to go to Carrie. Otherwise, just let them know where you wanted to go if it was anyone from our show who did it. I really hope it was.
By the way, our show is unbelievably good, our audience, at raising money for great causes. The way you guys stepped up for the Heritage Foundation, amazing. For Carrie Ingraham, amazing. The way you bought books, that we think the books, you guys are just amazing. And you are not at all shy about reaching into your pocket if it's a good cause. And we are humbled by that. And thank you very much. Now what?
So I do have a question about the Nasdaq. We broke through the 200, Mike, and then we closed back above it. And then we had if you want to call today a positive day, I know it's closed already. And I know people are seeing this a week later. But do you see any sort of like light at the end of the tunnel with that test of the 200 and the close back above, which is the red line down at the bottom there?
Interesting enough is we did, funny thing, last Friday we closed just below the 62.5. So the probability shifted, which would mean we'd retest that 87.5 level, which was 17,600 roughly. We did that on Monday. So we completed the short-term probabilities. Do we have a long-term buy yet? No. We could be also setting up for a major topping pattern in the Nasdaq. Let me I know this is going to come out next week, but let me give an example of something, because here's my example that I was talking about. Are there buy patterns, even if we roll over and retest these lows? Are there buy patterns? Sure. Like yesterday, set up a little mini double bottom pattern. So we've hit the first and second targets on that, but that's what I mean. I'm not even counting on it getting to the third target necessarily, because it's just a bounce. You can get bounce plays that are not major bottoming plays yet. So that is my whole point to this. There are trades to the upside still, but in the Nasdaq, the key level, if we don't take out Monday's lows, the key level to sustain another rally is back at $19,621 on a closing basis. Any rally that falls short of that and turns back lower I will watch for a retest of these key areas. Now,
Can you show me that level on the chart that you just had, the 19.6?
sure.
Sometimes it's
19.6
kind of
is
small.
right here. We also had a little
black
head and
line?
shoulders top, and then it broke down. You see, and that's roughly the old neckline from the head and shoulders top. The 62.5 is just below that.
Got it.
So we could easily rally, and if you look overhead, we have the rotation zone, which we've talked about in past shows. We have the hooking over 50. We have major prior support, which formed the left and the right-hand shoulder, which was retested on resistance on the 1st of August. So this, even on a rally back to that level, the market's got to do some heavy lifting to really get through that. So that's why, in my mind, it's got to, both from a probability standpoint and just from a pure price action technical standpoint, it's really has to do a lot of hard work to get back into bull mode. That does not mean, now remember, we could go into a sideways choppy market, but for me to get into bull mode in the Nasdaq, we got to get that close above 19,621.
Now, I think now is the first time you'll hear me ask for this, but I think we have to do the Russell now that we started that.
We will. Let me just jump in one more
trade.
thing. Since this is, I'm only on
Sure.
one
Oh, I thought you were done. Good.
month. One of the key levels at this point, based off the last October's lows to the highs in July, 16,700. If I start seeing a daily close on a closing basis below 16,700, followed by a weekly close, confirmed by a weekly close, then really I'm kissing the market goodbye in the short term, because we could easily test 15,000 and in the area of the vicinity of last October's lows. But in the short term, it would need to close below 16,700.
There's a quick political policy fundamental question.
Yeah, go.
With 3 months to the election, $800 billion still in the Treasury General account. Do you think there could be any kind of funny business to prop the market up into the election?
Yeah.
Again, you've been around for 35 years. You know what I mean?
Yeah.
Your opinion is good.
Do. I'm sorry, I do. I understand that they talk about how the Fed is independent, but the Treasury is not. The Treasury falls under the executive branch. And it's no secret that Treasury Secretary Yellen is not popular on the Trump side of the ledger. So it's not necessarily that she thinks she's going to keep her job one way or the other. She may resign after, if Kamala Harris were to win, if Vice President Harris were to win, she might resign. We don't know. She might think, okay, my work is done here. But it would not shock me to see, quote unquote, funny business like some stimulative spending coming from the Treasury. And also, again, we saw the schedule, which the schedule of the Treasury issuance gets announced, but I found out recently it can be adjusted midstream. And they're already talking about doing more bills again, which, Jimmy, one of the things you pointed out to me 6 months ago, that you started to see a trend that they were using bills as cash, basically, for lack of a better way of explaining it. I don't want to go into the weeds with it.
Wonky.
But essentially issuing more bills rather than long duration notes is essentially putting cash into the market. So I think they're already doing it, quite frankly. I am. By the way, it's a week later. Again, I keep saying how you guys are seeing this a week later. Why is it that Vice President Harris picked somebody who has espoused the goodness of socialism and has signed a law in the state of Minnesota that illegal aliens can get licenses and push defunding the police in the state and all these stuff? That's been talked about in the media as shoring up her base, where the choice of J.D. Vance was talked about going even further right. They're literally the same candidate on opposite ends of the spectrum. They're the same choices, right?
Yeah.
Anyway, I'm sorry. I just needed to say that somewhere. I've got a Fox News spot coming up, and they won't even.
So get revved up, because, by the way, People die in socialism. Socialism is a cruel, authoritarian method of government. By the way, it sounds so peaceful, like everyone gives up their stuff and the government gives them back. You know how I know that some people won't do it without a fight? Because I'm one of those guys. I will be one of the guys who makes sure that socialism has to be violent to be installed. There we went.
Jim, what about all those successful socialist regimes?
All of
Yeah,
them.
there's a list of them in history.
I
It's
mean,
just
I could
endless.
sit in for the next.
Hey, that wasn't true socialism.
This is just prove to me
sure.
where it's worked. Prove it. Show me.
Shoring up the base. It's funny. I don't even care. I could care less about who wins this. I care about who wins my HOA presidency and that Byron Donald stays as my representative. That's what I care about. I don't care who the president is. I truly don't.
Okay.
But, from that perspective, it just drives me crazy that the media will say this is shoring up her base versus going even further right.
But that's what we joke about the media, and we are the media now. This is journalism now, looking at topics without the bias of sponsorship money weighing us down, grinding us into some stupid little plebes. We don't have to worry about that. Those people can all go to hell. Let's move right along.
All right, moving on.
Russell.
Yikes.
Right now, I mean, we're holding an area of very key support. The major line in the sand, though, you want to watch for the Russell. There's a very strong support area around 1980. But if we break below that and then follow through with a close below 1895, kiss the Russell goodbye. That's my key level to the downside. 1895. Kiss it goodbye. We might not get there.
I got a question about this, though. Looking at this chart, that it's come into some obviously real significant support and held right there. Is that the first little inkling that this might eventually be a buy if the pattern can start to show some consolidation, then move higher?
Yeah, you could be a buy, but again, in the Russell, it's still a short-term bounce plays for me. Period for right now. Now, could those short-term bounce plays turn to something bigger? The key level for me is 2197, so 2200. Any bounce play has to follow through with a daily close above 2200. The challenge with that is there's a lot of overhead resistance. There is a lot of overhead resistance in the prior major breakdown, which I'm going to move a line there right now. We have a harmonic at 2197, and just the pure, the pure price action you can see here, the price action breakdown, which, then we've had a couple days sell off, but we broke down it below last Friday the 1st. This is major resistance. So on any bounce back, those would be key target areas, and then it would have to follow through above 2200 on a closing basis before I could get more sustained bullish. Again, everything's in a time frame to me. Like, I could be bullish in the Russell or the Nasdaq or the S&P for 2-3 days. But for me to get into 2 or 3 months, we have to get beyond and be able to hold beyond certain key price levels.
The rotation in the Russell. How do you guys, and this is for both of you guys, how do you think it works when we already, at least I think, and Jimmy, I don't think you disagree with me, that some of the selling we saw was selling winners to cover losers, right? But there was a period of time where the rotation happened prior to that. So does the Russell suffer more, or was it actually sort of more of a core holding in terms of being more defensive in the first place? What do you guys think?
So here I have to get some information from Mike. What was its percentage move lower compared to the Nasdaq?
The Russell? Yeah. I'll have to get that. Hold on one second.
Because it looked pretty steep drop, obviously.
The Russell.
But here's what I'm going to answer.
Yeah. Keep going. Ask your question.
So, Bobby, here's the way I'm going to answer, provided that the move down in the Russell was not as significant as the Nasdaq. I think the rotation trade was happening. The Nasdaq was getting hit. People were buying the Russell. But then as soon as kind of all hell started to break loose across indexes, then the Russell could no longer fight it at all, and the baby was being thrown out with the bathwater.
Yeah.
I like to believe that the Russell did a little bit better, and then that trade still has some legs, particularly in the event of a Trump victory, because of perception of small business optimism, less regulations, and potentially lower rates as well. Not necessarily specific to Trump, but I still like the trade. Michael, do you have the answers or no?
So the Russell from the highs dropped approximately 14%. The Nasdaq dropped
Oh, good.
17%. Now, we haven't
Right.
talked about this in a
Yeah.
long time, but the QQQ or IWM ratio, which is Nasdaq to Russell
Right.
based off those, you see, and this is one I've been monitoring, and we've had it on the show before. It's had a couple dips. It broke out massively, but then look at the unwind so when this chart's been going up, the Nasdaq's been outperforming the Russell. Well, on the way
Right.
down, that means the Russell is outperforming the Nasdaq, which we just saw with the percentages. I'm expecting this to continue to come in the over the next few months. So from a pair trading point of view, they can both be dropping. However, I would be watching for the Nasdaq to potentially drop more than the Russell on sell-offs. Because if the Nasdaq drops more than the Russell, then this will continue to come back down and retest some key levels. Does that mean you can have rallies in both of them, and the Nasdaq or the Russell could even bounce more than the Nasdaq? But overall, I'm expecting the Russell to outperform the Nasdaq. Even if this ratio does bounces, I'll be watching for rollover plays in the ratio between the Nasdaq and the Russell.
So I want to ask you. So if you go back to the daily, on this particular chart, the minute I see this, I mean, I guess I've been looking at charts with you for too many years. The minute I see the daily, I see a chart that looks like it wants to test and roll over. Now, obviously, I wouldn't get short this because I don't have a signal. But is that what you see as a probability, but not a certainty? That it looks to me like it's going to test the upside and roll back over, which would be the Russell outperforming, which means they could both go down, but the Russell could go down less.
Exactly. That's why it's, from my perspective, a pairs trade, because you can take advantage of the market declining, but the Russell declining less, and then eventually possibly outperforming once we hit a bottom. The only thing that will make me sit up and take notice, just again, here's the recent sell-off. The 62.5 level, which on a ratio basis is about 2.32. I'm not expecting people to remember that, but even on any rallies where you have a rip your face off rally, the Nasdaq and the Russell potentially sits there. Unless this ratio can recover a ton of lost ground, I'm watching for rollover plays. So I'm watching for the Russell to outperform the Nasdaq in some way, shape, or form. That can include, especially what you said, Bob. They might both sell off, but overall, the Russell should not sell off as drastically as the Nasdaq if this ratio is going to continue in the long-term direction, I think.
And I think, Jimmy, you could ask anyone on the street who knows anything about markets at all. You say, hey, if they were going to sell off hard, which one do you think would lose more? Most people would say the Nasdaq, right?
Yeah, because it just always outperforms in either direction.
Yeah.
Or underperforms, whatever you want to say.
All right, so can we do Tesla now? I'm just kidding. I'm just kidding.
He's kidding.
Don't.
I do want to cover a stock, though, so let me know after we look at maybe gold for sure. I want to look at gold.
I'd love to look at gold.
I want to do an on-the-fly stock analysis, one that I haven't told him about. I have not told Mike about this ahead of time.
No.
Good.
Which is fine by me. I love on-the-fly analysis.
Yeah, and I'll go ahead and say early that I actually like this stock almost regardless of what happens, but I don't like the business they're in. There's your hint, but go ahead.
Gold.
All right, gold.
Short term, it's getting a long term. I'm still bullish. It's getting a little toppier. It's been unable to sustain something in the short term. My key level is 23.75 on a closing basis. Which does that mean it's done for? No, but that means it's probably back into consolidation, and we've roughly gone a whole bunch of nowhere since middle of April. The key level I'm watching, the very key level I'm watching, when I will say, okay, I'm looking forward to start selling rallies in gold and be very patient in the long term, is back at 2193, 2194, which from a harmonic standpoint is from the lows in February to the highs. Again, I also believe gold, when the market was dumping, you saw a lot of gold getting dumped too because it was a winner. All right, well, you got to sell something to cover some of the losers, but somewhat the nature started to shift in gold. But until we get below 2193, 2194 on a closing basis, which would take us below the 200-day, I'm not worried about anything in the long term.
So your short-term level was 2375. It closed below there. More significant a pullback, probably to the high 2200s, which is the bottom of that range, correct?
I'd be watching for a pullback probably to around the 2300 to 2315.
Okay. Yeah, I got
Which could easily hold. I mean, that would just be it. If I pull up the weekly chart, you could see, that would just be, it would be a little breakout to the upside, which we also had due to the contract roll. But that would still be holding a longer term consolidation. That would
Makes
really
sense.
be, not so great for short term bullish pattern, but it wouldn't invalidate the long term.
And a little public service announcement too. The three of us are rightly so believers in the poor stewardship of our currency. So we have a natural bias for gold. By the way, it's not necessarily a bias. It's an opinion that I think happens to be right. So I generally trade around my long position in gold. So when I'm asking about the 2375 level, maybe I throw on some puts if it closes below it. But I will always be long gold for the next couple of years at least.
Yeah, see, you're very smart there because I talk to people all the time. I'm like, some of these things, including gold, including silver, I call it's trading around a core position, which means I have a core position on. Okay, I'll even trade things like uranium around a core position because it goes a lot of back and forth, but with an upwards bullish bias. So,
Right.
short term, you could take some profits off, in my viewpoint, and then on pullbacks at strategic levels or at buy signals, you put something back on. I hate, especially with gold, because gold can go a lot of nowhere for a very long time. So I like to have
Bobby,
it
can I bring up
generate
what my
something.
strategy was that I unleashed a couple of weeks ago in gold?
Yeah, go ahead. I
So
remember it.
I have been selling call spreads above it. Okay. Because I have gold long, my core long, for the explosive move higher when the shit hits the fan. So I've decided in the medium term to get a yield from my gold. I sell not calls, I sell call spreads because I don't want to be called out and have no more gold and have to pay all the capital gains. So I have been rolling them. I've rolled 3 sets of call spreads so far, made a couple grand, feels good. Did I give up any upside? Not yet. I could potentially, but so far so good.
Yeah, and again,
When you say you could potentially, you mean you lose money on those call spreads, right?
What's that?
When you say you could potentially, you mean you're going to lose money on some of those call
Well, I
spreads.
could lose money on the call spreads, but at the same time, I'd be making the money on the gold. If I
Right.
lost money on the call spreads, but I'd be forfeiting the money I would have made on the core long
Right. I
position.
don't want people to think that they somehow come and confiscate your metal
No.
because you had a call spread on. Most
Yeah,
people
I
know
have
that.
some paper gold positions too.
Yeah.
But yeah, I sell call spreads against my gold, my actual gold position. Come
Mike,
get
what
it
were you gonna
right
say?
out of my dead cold hands.
which is another great way to play things, because also if the crap started hitting the fan, you can also unwind the call spreads pretty quickly. Yeah, you're going to take a little hit, but then take the hedge off, take that money generation factor off, and just let the thing run at that point. But how many times does gold rally for a bit, then stall out, and people get antsy?
Yep.
I like what you're doing,
I don't
Jim.
really get my 7%. Yeah.
Yeah. So people forget there's other ways to do that. I mean, yesterday I sold single stock puts, on a bunch of different names. And, a friend of mine was like, be careful the VIX doesn't go to 80. It was at like 62. And I looked and I'm like, it's only gone to 80 twice since 1950. So I'm like, I think I'm okay. I think volatility is right where I want to be selling puts. You
Yeah,
don't
I'd
always
rather be a
have to
seller
go
there than a
in.
buyer.
Yeah, you don't always have to go in and say, oh, well, calls are cheap. They're not cheap if vol's going up, right? They're not as cheap as they should be. The stock isn't necessarily the right play. So I went out of the money and sold calls. I covered them this morning as soon as we opened up.
Nice.
Yeah, because it was a
Vol
mega
got
play. I mean,
crushed today.
you could even sell puts. The
Yeah.
market could have continued to drop, but volatility came in, and you can make the. We talked about this on my live stream yesterday. People asked, well, what about selling some vol? Which is fine because if vol really comes back in, and it was slightly overblown yesterday, as we already talked about with the blood in the streets, 75 basis or emergency cut, and vol could come in with the market just not going down anymore, and you're going to collect on that Vega play.
And
Particularly
again,
if
you
you
guys are
want the
watching this a
stock where
week
you sold
later.
before.
You guys are watching this a week later. You may miss it, but we should talk about this in the live show tomorrow. If you guys haven't seen our Trade Air live show, you should. Just look for us on Twitter, and you'll be able to find the link to the show. Go ahead, Jim. I'm sorry.
No, I don't remember what I was going to say. Let's go to the stock.
You want to go to copper first? Because
Sure.
copper entered bear market territory.
Yeah.
But I still like it. So
Oh, I do too. It was always
I'm
a
not buying
long-term
it
play, as
today,
we've said a million times.
Yeah,
Was I thumping my chest when it was at those highs? Yes. And I'm thumping it a lot less now, but it is a long-term play.
yeah.
From a probability standpoint, we should still head lower on on any rallies. I'm in sell the rally mode. Magnet price about 370 is the magnet price overall, which would take us back into the huge consolidation pattern area. So we've closed,
Which was only 2023, right? It's not like it was 10 years ago.
No, it's but
And
it's
Jimmy's been talking about this long since like 2021.
Yeah. Yeah.
But overall, we could easily, from a
beautiful.
probability standpoint, drop back into 370 area. I'm going to be very interested to see where we close this week. And by the way, the show drops, we'll know. But that's roughly right around this $4 mark. I want to see where we close this week because that would be another signal that means you're not going to drop there probably instantaneously, but on any rallies, I'd be looking to, if you're holding a core position, I'd be more aggressive on putting, hey, maybe you do what you're talking about before, sell some calls or call spreads or something else around it to harvest and offset any declining price so you can still hold a long-term core position because there can be still copper shortages, but in the short term, you're also having hey, we could be getting into the global recession play. And just from a pure probability standpoint, it's been sell the rallies for a little bit of time now.
Right.
All right. While Mikey pulls up Pfizer and I give him like 30 seconds to look at the chart, I'm going to tell a quick Florida story if I could. You guys ever hear of Sheriff Grady Judd?
No.
All right. So he was a Florida sheriff 2013 and 14. I'm sorry. No, he was a sheriff longer than that. He was elected in like 1994. But anyway, in 2006, they pulled over a guy at a traffic stop. And that guy ended up pulling a gun, shooting the deputy, killed him, shot the canine dog because he was a canine deputy, killed the dog, and then shot the guy's partner, stole the deputy's gun, ran into the woods. They brought a SWAT team shoulder to shoulder to go through the woods. They found the guy, they shot him, and they killed him. But they shot him 68 times. When a reporter said, why 68 times? He said, that's all the bullets we had, or we would have shot him more. That's why I like Florida. Okay. Ready to go.
Now in Illinois, you go to jail for that. That's so funny when they shot the guy 16 times in Florida. Van Dyke was the guy's name.
Yeah.
I mean, in Illinois, he did nothing outside his training. The guy had a knife, wouldn't drop it. He turned and he shot him.
Yeah.
I have many friends in law enforcement say you're supposed to eliminate the threat. They got him for murder too. That is the wrong charge. He shouldn't have shot him 16 times. But if there's a law for shooting a dead body 5 times, then maybe hit him for that. But it's certainly not murder. But anyway, that's just my 2 cents there.
Yeah, I mean, the first bullet, he was doing his job.
Yeah.
The rest, he
Yeah.
was having target practice with a corpse.
He seemed like he was a little scared. He
Probably not nice.
reloaded.
But I can't believe the balls on this guy to say, the nards on this guy to say, because we ran out of bullets. They said, "Well,
at least
was
it's
on some
truthful.
podcast." He was on Patrick Bet-David's show, and Patrick Bet-David goes, "Where does that come from?" 68 times. He goes, "From the heart." It's like, I love that answer. So he killed the dog.
Yeah. Yo, believe me, I'm going to be letting loose bullets. If they kill my partner, kill my dog, yeah, there's going to be trouble.
Yeah.
Right.
All right, Mikey, Pfizer. So I want to temper this by saying I like Pfizer as a stock. I don't like them as a company.
Please,
I despise them as a company.
Despise them
But
as
we're
a company.
agnostic about we're agnostic about that kind of thing here in the Futures Edge show. So I think the stock is both defensive and could possibly survive an upswing with a little bit of juice to it. What do you think about the chart?
I mean, the chart, if you're looking at something in the short term, it does not have a super
Yeah, it's a trade.
It's a trade. The key line in the sand is 2760. The key support before that, which I would not want to see broken, is about 2830. So, again, if you get a close below, just remember 28. Any pullback to 28 is very, very, very major support. You start closing below that, and then you lose 2760 on a closing basis. I would not be touching anything from the long side, because here's your weekly chart. So far on your weekly chart, I mean, you'll see right here what I've drawn. We've had the sell-off, little sort of rounding, channeling, flag pattern. But then if we come back down to that daily chart, you see what happens. Here's the 200. Here's that 50% harmonic. And here's that channeling pattern. We start breaking that and then follow back through with a close below 62.5. This is a confirmed bear flag pattern. It's just broken down. So I'd be expecting and watching for a retest of this 25.50 to 26 area before setting up a potential longer term bottom. Now, if we can hold that 28 area and even retest the bottom of this channel, it gets a short term or a buy pattern. It still could get more bullish pops, and it could still be played to the upside. But if you start breaking that, I wouldn't want to be touching it.
This feels like a Chipotle conversation all over again.
No, it's
the difference between this and a Chipotle conversation is I like Chipotle. I could eat there at least twice a week. Pfizer is a disgusting company. Pfizer is a company that profits from people being sick, and yet everybody thinks that their motivation is to make everybody healthy. I'm sorry, it just doesn't work that way in business. If people buy the stock, they want them to sell Ozempic. They don't want people on the treadmill. Is anything I'm saying there wrong, Bob?
No. You are absolutely correct. I got no beef with any of that, except the stock's going to go up for a week or two.
That's fine. Yeah, I'm sure I have the stock in some mutual fund or some retirement account somewhere, but they're disgusting. Sorry,
Can't
Albert.
we just have...
No, it's Albert's not the guy's name. Yeah.
We need medical things to be not for profit.
Oh, hey, that sounds socialistic.
Nope.
Well, he doesn't
know
responsibility
for their own
He doesn't
shit.
mean government.
Nope.
He's explained this to me before. He doesn't mean government.
Not at all. I don't mean government.
Oh.
But... okay, and that does not mean the company can't make money. I think insurance companies should be listed as not for profit, which does not mean you don't make profits. My wife's medical company is not for profit. Doesn't mean they don't make money. It just means they're not making egregious money, and the money they hold into reserves are there for the long-term benefit of what they do, not for the paying CEOs to buy 6 yachts on the back of people's medical bills. I'm all for capitalism, but there are certain areas...
I'm on board with what you're saying. You've convinced me on that, as long as the government's not doing it.
I don't want the government to do it. I'm saying if you want to be a private or even a publicly traded medical company, you're there, you fall under the not-for-profit rules, and there's specific rules for that. Means, look, if you want to have whatever other company, like a car company, a Google, whatever, go make all the money you want. But, once you have, there's 2 things, insurance which medical also because you're going to have medical insurance aspects. But like these hospitals, you know, the ones that are taken over by private equity, and they don't give a crap about treatment. They don't give a crap about people's lives. They just care about the bottom line. And when the bottom line gets in a couple areas, there's, you know what? If you want to take over as a private equity company, then you fall under it as a not-for-profit, which then they won't touch it because there's very different rules.
My
Yeah,
mother
no,
recently, guys,
like
my
it.
mother had trouble getting her diabetes medicine because the company was making too much of the weight loss drug, and they were
Jesus.
short on the diabetes medicine. Shows you what
Wow.
good people they are.
So that's all I'm saying. I don't want the government to interfere at all. I don't want the government to manage it. I want the government to get the hell out of pretty much everything. Okay? Because
Thank you.
so last time I checked, the government does not help too many things by getting involved.
No, they're involved in the cost of education and the cost of healthcare.
Yeah, and how well is that served?
Right, Bobby, do you want to do one more essay? Or you want to call it?
No, I just want to thank Al Gore for inventing the internet.
It was so sweet of him to do that because it really helped us. It helped us communicate. Al Gore, you are a hero. You should be sainted, in my opinion.
I'm picking up your sarcasm, just so you know.
You think? Yeah.
There's no sarcasm here.
No.
Just like last
about it.
week,
What are you guys doing the rest of the
I
day?
said, hey, why haven't they cut? Why aren't we going to zero interest rates yet? Why stop at this 125? Let's go all the way to zero again.
We should have zero immediately.
Mikey, tell people where they can find you, and go ahead and include our show tomorrow, even though they're not going to be able to see it from this message.
You can, well, if as long as my Twitter's not suspended for the umpteenth time, it's at MG Arnold, or you can just search for Path Trading Partners on YouTube. Those are the two best places to find me until I figure out a better solution.
Hey, even though it's for weird reasons, Jimmy, don't you think that's a wonderful endorsement that these guys should follow Mike on Twitter? Is the fact that he gets banned all the time.
No, I was about to say the same thing. I think it's fantastic. Dave Collum gets banned all the time. He's been Berenson, Zero Hedge. It's like the Hall of Fame for people who've been banned from Twitter. And I know that Elon Musk bans people for different things, but he shouldn't do that. Okay,
Shouldn't do it
I
at
don't
all.
want to get banned from Twitter, and I don't know how to go out against him yet. We've been canceled before, but I like Twitter.
So I get him on the show.
Yeah.
First off, you have to stop calling it Twitter, even though I call it Twitter all the time.
Bob's don't want to know who calls it X.
It's
Oh,
X.
yes, I do.
All right. By the way, I don't know, for you guys watching here, this has been the second show in a row where it hasn't been controversial. We haven't had any policy guys. We haven't thought that we had a show that in 5 years we weren't going to be allowed to have. And frankly, I miss those shows more. I like these ones just fine, particularly with the market volatility. I needed to know about it. But hopefully soon we'll have a guest on and we can get back to what our true calling is, ruffling feathers and pissing people off. But by the way, none of this works without the support that you guys give us. And we appreciate that very much. All the DMs, all the retweets, all the subscriptions on YouTube, they do not go unnoticed. We appreciate that. Remember what Bobby and I are trying to do. We'll spend a lot of time in that bullshit mainstream media, and everything there is pressure from a producer or pressure from a sponsor to say certain things. We have none of those pressures. What's the George Orwell quote again? I know I said it last week, Bobby. It's about journalism is reporting on something that people don't want to talk about. Yeah. Everything else is just propaganda. We don't want to be propaganda. We want to give our honest opinions and have guests with honest, good opinions. So thank you guys for being part of it. This is the Futures Edge. I'm Jim Uriel. That's Bob Iacino. That's Mike Arnold. Thank you.